Wednesday, June 22nd, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at modern day precious metals confiscation. Yes, that's an idea that I've been putting forward for the last few years, and also financial repression. Today is a great example of it. We're seeing very high CPI and RPI data come out in the UK. They reflect, of course, rising prices. More popular, they're known as inflation, and I hate to say that inflation it has come out high, because we're not getting inflation right now. We've had the inflation and we're getting the consequence of it, which is a depreciating currency that is reflected in higher prices of things. Prices are actually not going up. It's the currency that's collapsing here in the UK, and it's going to happen everywhere else in the EU, Eurozone, in North America, in Australia and New Zealand, in Japan especially. And yes, financial repression and confiscation are both linked together, in my opinion. So before I start, I like to say it's a beautiful day today. Yesterday, I actually had a really nice day. I want to talk a little bit about what I do as well, aside from sitting here most of the time watching everything for a great part of my day. So many of you know that I like to play golf. I've been playing since I was 15, so since 1980. Been playing a long time. And yesterday, one of my friends at my golf club, he asked me to go play somewhere else. He organizes what's called a golf society. I'm not a member of it. And this one was actually a golf society for a conservative club, of which I'm not a member either, but we had a really nice day. So just wanted to show you the picture here with my friend. The golf course was about 30 minutes away. It was a really nice day. Played quite well. Didn't win because some people with high handicaps won. I played, I was about 6 over par for 18 holes, which isn't too bad. Back 9 was a little bit shaky. I was 1 over and 5 over. So there you go. A little bit about myself. You need to enjoy life as well. Maybe it might seem that I worry too much about what's going on, and it's understandable because things are not great, but just wanted to show you guys. And each one of you has your own thing, of course, and yeah, it's the old saying of seizing the day. You can't let this scare you and yeah, stop you from living. So I've spoken about this several times, and that's one of the reasons why I don't think there will be gold and silver confiscation, because they're already doing it through, it might not even be price suppression, but price manipulation, creating the volatility, the uncertainty in precious metals, and putting a lot of people off. A lot of people, despite the fact that gold has held actually really well this year in terms of the dollar, it's pretty much unchanged, maybe a little higher right now, year to date, while all other assets, stocks and bonds especially, are going down the chute, right? So it's done really well. It's done really well in foreign currencies like the pound, the euro, the yen. I think we're up almost 10% in those currencies. In the yen, it's probably even more. But the sentiment and yeah, the mood is really bad. And that's despite the fact as well that Bitcoin is down like 60% year to date. People are still unhappy about gold and silver, but I think that's how they do the confiscation. They discourage people from acquiring physical gold and silver, and that's what I'm talking about. And if you go back to the WikiLeaks document that was published some years ago, and this was documents from 1974 between the US Treasury and the Foreign Office or the UK government, and also bullion dealers in London, because at the time London, well, and even now, it was the center for international gold trading. In January 75, gold was going to become legal again for Americans to own. So they're trying to find a way to discourage people from acquiring physical gold during those years as well. And that WikiLeaks document says that, well, one of the officials states, well, we should be able to keep people out of physical and speculating through the new futures contract on COMEX. Yes, the gold futures contract on COMEX started December 31st, 1974. That's because the settlement is January 1st. So they're right there even before it started to keep people away from the metals. And that's what they do. And why do they do that? Well, because they know that gold and silver are essential for longer term wealth preservation. Keeping fiat currency, whatever you want to call it, in the bank is a losing proposition in any currency, any country. And they don't want the general public protecting themselves. They want the general public in the debt markets, speculating, borrowing. They don't want you self-reliant and independent, because that's what gold and silver do in the long term. Yes, in the short term, it has been frustrating. But silver, for example, I think is probably one of the best tools to survive this coming mayhem that we're seeing of inflation that could go. I think we're very close to hyperinflation, especially when you see bond markets rallying on a day when UK inflation comes out at almost 12%. Yes, I know the CPI came out at 9.1, but I'm looking at the RPI, which includes things like rent, and council tax. It's really a better reflection of what the general public is going through, and it's understandable why they're striking, right? It's not 9.1, it's more like 12%, probably even 15%. That's how fast our currency has been debased. And despite that, the 10-year yield, gilt yield today is down almost 9 basis points at 2.57%. So you've got the currency being debased at more than double digits, and the government only paying 2.5% to borrow money for 10 years. This tells me that there's manipulation there. The central bank, the Bank of England, and the Treasury, they are manipulating in this, buying these gilts to keep people in the game. I can't really imagine that someone with experience in markets and economics who works in the financial sector wanting to buy gilts when you've got inflation at 12-15%, wanting to buy 10-year gilts at 2.5% for their customers. That's a complete how can I say, loss of fiduciary duty, because financial advisors and investors it's a little bit like doctors. They need to keep to their Hippocratic oath. And in this case, maybe they don't care about their customers' money anymore. Maybe they just care about the fact that they're getting their fees. But that's financial repression. That's to sum up, people have nowhere to go with their savings. If they put it in the bank, it's like maybe, I don't think it's even more than 0.01%, I think right now, or 0.1%. When I look at my bank account, they haven't even raised rates, despite the fact that the Bank of England has. So you put your money there in a savings account, and inflation's running double digits, and you're getting less than 1%. You put it in the stock market, and it's losing value. You put it in the bond market, it's losing value, and then you think, oh, maybe I should buy gold and silver, and then you think, oh no, it's too risky, and you only look at the price of gold in dollars, and you don't realize that in pounds it's actually up 10%. So they want to keep you away from protecting yourself. I think what they really want you to do is to keep spending and borrowing, and that's financial repression. And what financial repression does as well, it allows the government to write off the debt, because the debt is losing, you know, in real terms. So the only problem that they have is if the economy slows down and doesn't grow and we get a recession. That's what I think we're getting now. So it's a big mess. It's not going to get better, not just here in the UK. And that's why I'm sticking to stacking. I went to my coin dealer the other day. I also deal with gold investments, but I like buying a few numismatic coins, and I bought a few ounces of silver as well. Quite expensive. I think the cheapest I got was £25, but the new coins with the VAT is like £35. So you figure that, you know, with the price of silver below £18. But I bought an interesting coin. It's a South Sea Company shilling from 1723. I never realized that the South Sea Company of South Sea Bubble fame issued coins or minted coins. So here's the coin. It's a shilling. It's a little bit similar to the quarter, U.S. quarter. Yes, I paid more than the silver price for this coin because it's a collector's coin. So yeah, that you learn something every day, because the South Sea Bubble burst in 1720, but that company I think kept running up until the 1850s, and all the debt that resulted from that collapse of the South Sea Company bubble went into our national debt, so we're still paying for that debt today. So let's quickly look at the markets. Yesterday I was out all day because we played golf, and then we went back to this conservative club that I told you about. I'd never been to. It was very nice. And we had a few drinks, and I got home quite late. But I see that the stock market did quite well yesterday. I think it's a dead cat bounce, and I'll show you why in a minute. I see that the Dow was up just over 2%, S&P about 2.5%, and the NASDAQ as well. So I've got this chart here. It's a very long-term chart of the Dow. It's going back to 1900, but on the screen here I've got it from 1910, but I put it back to 1900. But I want to show you like the future, what it could be, and the timing is very difficult. I'm not a cycles analyst, I'm more of a technical analyst, but as you can see here, there's a very long-term channel, upward channel. And I think this is the inflationary, partly inflationary, partly, of course, growth picture of the U.S. economy since, well, 400 years, since 1920 or so. And you can see that recently the Dow broke out of that channel. And I think this was kind of like the crack up boom. So what I think we're getting now could be the collapse, unless they come out again and try to keep the crack up boom going. But there's some interesting trend lines. Years ago, there was this megaphone, as you can see here, that I drew. And it was being tested back in like 2014, 2015, and then it broke out of it, because normally a megaphone, the market from there, from just below, well, it was around 17,000. Usually it goes back down, and it should have tested, let's say, the 5,000 level, the bottom of the megaphone, but it didn't. And you can see March 2020, we tried to get back below that megaphone, but they threw everything at it. So now that megaphone, I would say, is around just above 20,000. And then there's another trend line here that comes around 22,000. That could be by the end of 2024. So there's some interesting levels here. Like I would say the 20,000 level is really important for the Dow, and I think that could be maybe where the Fed pivots. And if it doesn't pivot, look out below. I mean, there's also the bottom of this channel, which is around 10,000, I would say, in the next 3 to 4 years. And if 10,000 goes, I would say 5,000 is the next support. So that's why I think in the short term it's difficult to see where we're going exactly day to day, but the medium to longer term trend looks lower. So let's look where we are right now. It's 20 to 9 a.m. London time. Let me just bring up the markets here. So yeah, start with the stock market because we're just looking at that. The Dow future actually is down 1.5%, 460 points. So it's lost, I think it was up about 600. So it's lost a big chunk of what it gained yesterday so far. It's just above 30,000. The NASDAQ 100 future is down about 1.8% or 216 points. The S&P 500 is down 1.7% or 63 points. Yes, gold and silver are coming off a bit. I've noticed gold has actually rebounded in the last 15 minutes. We were at 1830, so still slightly up on the year to date in dollar terms. I think the settlement on December 31st last year was around 1820 or so, maybe 1825. High's been 1834, low 1824. Yeah, silver, it's trading at 2140, down 30 cents, 1.4%. Low's been 2122, high 2173. To the currencies, we got sterling down 0.8%, so it's down quite significantly. It's at 121.77. So you see gold is down 0.2 and sterling is down 0.8. So actually gold in pounds is actually up today, which is fine with me. The euro is down 1/3% at 104.97. The dollar is down 1/4% at 136.21. So the yen continues to flounder. And the dollar is up quite a bit here versus the yuan. It's at 6.72. And the dollar is unchanged versus the Swiss franc at 96.70. And I think I saw a comment yesterday about the ruble. Yeah, the dollar is continuing to come off. Dollar's at 53 rubles. So ruble's still very strong. That's another sign that real things, hard assets, commodities, precious metals are going to continue to do well, in my opinion, because the ruble is the commodity currency par excellence right now, I would say. Let's have a look here. Aussie dollar is down actually 1%, just below 69. And the dollar is up 0.5% versus the Canadian dollar, 129.79. And the Kiwi dollar is down just over 1% at 62.60. And now to the general commodities. Yeah, crude is down substantially here, down 5% at 103.44. And someone showed a chart of crude the other day, and it does look like we could go further down. But longer term, as I said, I think it's still very bullish. And as I've said many times, these things don't go up in a straight line. Brent down just under 5% at 107.06. High-grade copper is down 3.3% at 391. And nat gas, US nat gas, is down 1.8% at 667. So I think we're seeing here a deflationary correction, so to speak. Deflationary in terms of asset prices, not in terms of money supply. And commodities are getting caught in this a little bit. But commodities, of course, have been outperforming stocks and bonds massively this year. So in relative terms, I expect them to continue to do well. I just finished with the bond market. Yeah, the 10-year yield is down 8.5 basis points at 322. Yeah, I think there's a lot of manipulation in the bond market, and I think some of the participants there, they're still brainwashed, and they think that the central banks are going to succeed in quashing inflation. Yeah, they're going to be succeeding in maybe pricking the stock and bond market bubble, but commodities and real things are going to continue to hold their value versus their, these fiat currencies. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And yeah, I wish you all a great day. Take care. Bye.